Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Well, we've not just ended the day and the week, we've also ended the month, the quarter, as well as the financial year. And it was a challenging financial year, FY25 rather, for the market. But still, we managed to end or close off the financial year with gains of somewhere around 6% on the Nifty for FY25. For the fiscal year, the mid-cap index was up somewhere around 8%. Even the small-cap index was up somewhere around 6%. But it was a challenging year, to say the least. Quite a few challenges, in the year gone by. We had earnings growth slow down to contend with. There was tighter monetary policy, not just in India, but across the globe. We had the general as well as state elections, which led to quite a bit of volatility in the market. And we also had US elections. We had Trump making a comeback as the US president. And ever since then, we've seen a lot of tantrums in terms of tariff, which of course will be extending into the new financial year. As well. But quickly taking you through the top gainers this financial year on in FY25, we had the stocks like Bharat Electronics, Airtel, Shriram Finance, M&M. These were some of the top gainers. But you had stocks like IndusInd Bank, which shaved off somewhere around 60% or thereabouts, in FY25. Of course, the bulk of the selling came towards the end of financial year, in the wake of all the troubles that are brewing at IndusInd Bank. Tata Motors was another one which saw a 30% cut. In FY25, Adani Enterprises, Hero MotoCorp, these are some of the other notable laggards for FY25. For the mid-cap universe, some of the gainers were the likes of Mazgaon Dock, BSC. Both these stocks, yielded double returns if you look at FY25. Paytm as well, a 95% gain in FY25. For the month of March, true to its, what do you call it? The March, in fact, being a seasonally strong quarter, we did see a very strong recovery coming in on the Nifty after months of sell-off, right? So in the month of March alone, the Nifty added somewhere around 6.7% or thereabouts, it being the best March since 2019. For the quarter, the Nifty is down 0.5% or thereabouts. But if you talk about today's action, in fact, the last couple of sessions, the market hasn't really done much. Of course, we have the April 2 deadline to contend with when it comes to reciprocal tariffs. Markets have been cautious ahead of that. Today, we started the day on a positive note, but of course, we succumbed to selling pressure, and any attempt at making a comeback and ending in the green were feeble, so to say. The Nifty did test that 23,500 mark, but ended off session lows. The mid-cap index also gave up its gains, but it was trying to hold on to gains for the better part of the session. But in the end, even the mid-cap index turned negative. The breadth was negative today, and if you look at the sectoral movers, IT remains a laggard. Media was the other pocket that saw a fair bit of sell-off. Realty, autos, after yesterday's weakness, continues to be under pressure. FMCG was one pocket that managed to do well in an otherwise sideways market. Among the top gainers today, Tata Consumer, Kotak Bank and ONGC. On the flip side, you had losers in the form of Wipro, Shriram Finance, IndusInd Bank, Cipla, and the new entrant on the Nifty 50, that was Zomato for you. But, let me get on board our technical expert for today. Then joining me is Amardio Singh, Senior Vice President, Angel One. Amar, lovely having you on the show. It's been a while, but we have a very crucial event coming up next week, the April 2 deadline when it comes to reciprocal tariff. For FY25, whatever said and done, it was an extremely challenging year, but we've seen gains of 6%. March, of course, has been a great month for the market after months of sell-off. How are you, looking at the market now? A couple of days of a sideways move, so to say, but positioning ahead of 2nd of April, how would that be for you?
Yeah, thank you for having me. So yeah, definitely March has been a good month for the markets. Nothing much to complain, because the way we saw the markets post-September correct from almost 26,300 levels to sub 22,000 levels. So it's a decent comeback, to say the least. Now, definitely markets have been in, or you can say are in uncharted territory, because the way the tariffs are being announced, and also, as you rightly said, the reciprocal tariffs are to kick in from the 2nd of April. That's definitely causing concerns, because we saw in the US markets also many of the US companies in automobile, as well as foreign companies also, they witnessed a sell-off. and concerns are in India and other countries as well. So these and tariffs on other products also will definitely have an impact. There's no doubt about it, because for every for 4 rupees worth of GDP, one is from the US. So roughly around 25% or so. It's not like the Russia-Ukraine war, which the world has ignored and the world continues to stay as is or work as is. It's the US, so anything impacting there definitely has a impact across the world. So it would lead to definitely highly volatile situations in the markets. That definitely is not ruled out till the time there is some clarity as to till when this will happen and how much impact that's going to happen. Because tariffs on one hand would be, if you look at it from a US perspective, it would be good for the US, but at the same time it would not be good for the US consumers, because they would have to pay a higher pricing. So how that works out is something we need to watch out for. That could be a place where the US president might have to take a pause and to look at how it is really impacting. So as far as our markets are concerned, I would say overall we've seen some sharp pullback, but at the current levels, we could witness some sort of consolidation. So on the upside, 24,000, 23,800, 24,000, that's a zone of resistance for the Nifty. On the downside, however, we've got now very strong support. So the recent base or the recent bottom seems to be very important. If that is breached for whatever be the reason, then we could witness some real sharp correction. Otherwise, it seems that we could stay on a positive trajectory, and there could be volatility as well. As far as the Bank Nifty is concerned, what we are seeing there in particular in Bank Nifty is that some of the heavyweights like ICICI Bank, HDFC Bank, Kotak, Mahindra Bank, and SBI to a certain extent, they are showing some positive signs, and also there could be some rate cuts going forward as well in the domestic market. So overall, it would be interesting times ahead. But investors and traders alike have to be prepared for having more or seeing more volatility in this to come.
Okay, be prepared for more volatility. Of course, till the time clarity emerges as to what happens with reciprocal tariff and, how much of it is announced and, how it impacts Indian companies, of course, that would be the trend decider, so to say, going forward. But, Trump has, of course, walked the talk when it comes to tariffs. We saw what happened with auto import tariffs, right? But, particularly two sectors, autos and pharma. How would you really position yourself in these two sectors? Because after auto now, it could be the turn of the pharma sector to witness a tariff being imposed. So here on, how would you play these two sectors?
So see, US, if you look at the US healthcare cost definitely is extremely high. If you look at India per se also, our costs have also gone up multifold over the past decade. Healthcare costs in terms of hospitals, in terms of medicine, that is definitely way high in the US. And the US president has promised to look at that and bring down those rates, because ultimately it's all you can say it's a chain of industry. So you've got the healthcare industry, that's the hospital and the healthcare. Then you've got the pharma. Then you've got your insurance companies. So they all tie together. So somewhere or the other, he would definitely want the healthcare pricing or the healthcare rates to come down in the US. As far as our companies are concerned, see, if you look at Indian companies, Indian pharma companies, we are not R&D, we are not into breakthrough research or producing molecules which are going to, we can earn on patent. So that's not happening, and we're not seeing that happen to a great extent, and neither we are seeing it anytime in the near future. Having said that, so what basically the Indian pharma companies would look at those molecules which have expired, the patents have expired, and then they go in for the reverse engineering and that's so somewhere or the pricing is the advantage that Indian pharmaceutical companies have had. So there again, looking at because Donald Trump would also have to understand that you can't manufacture everything in the US. You've got to get things from other China as well as India and other countries, and you'll have to look at what are critical and where you should charge tariffs and where you shouldn't charge tariffs, because that would ultimately lead to a spike in prices for the end user in the US or the US citizen. So looking at the pharma, what we are seeing is the pharma had also, with the market correction, the pharma stocks have also witnessed some sort of correction. So it will be very stock specific to a certain extent, which I see, and there could be some beneficiaries as well, but we'll have to see how that really works out. But right now, pharma is definitely witnessing some sort of correction. Leave apart Glenmark, pharma is one which has been holding quite firm, has bounced back and it's up almost 20%. So it will be more of the products which they are manufacturing and what the US is actually looking at, whether it's getting manufactured in the US at what price, and also if they
Right.
want to import. So these are certain things we'll have to. It's a very complex area right now.
Sure, a very complex area. Of course, it won't be really easy to impose tariffs on, healthcare, because healthcare costs in US would also go up, which are already very high, as you also pointed out. But let's break it down to certain stocks. Then BSC, of course, that's the stock of the day, so to say. For the last 2 days, I would say, given the fact that it has rallied almost 20%. Of course, a big overhang has been removed after SEBI has proposed exchanges to pick 1 out of 2 days for F&O expiry. Of course, NSE has deferred its Monday expiry plans on SEBI's consultation paper. In reaction to that, BSE ended higher by about 16% or so. And of course, there's a bonus issue also that the company will be mulling on the 30th. How do you really see this stock now? It is one of those stocks in FY25. It has given 116% return, so to say. This particular move over the last 2-3 days, or in the recent past, would you see that as a fresh breakout? Would you see levels of 6,000 being tested anytime?
See, overall, if you look at BSE definitely has been on an upward trajectory, and you can, or I would say one can very well say that this has been one of the star performers and has been a multi-bagger, no doubt about it. It's gone up more than 10x over the last 2 years. So that's a very big achievement, and also the way BSE has come up in terms of their market share, be it the F&O, which they were not very active, but they've come up really well. And but the latest SEBI circular on the weekly expiry, that seems to have really worked for BSE, because there were definitely some concerns with regard to how that could impact, because if NSE changes to Monday, so how that would impact. So I think markets have taken that positively, and the volumes also are significantly higher today. But the big question which you asked is that, is it going to reach the 6,000 level? It could rally towards that level, because if I look at the long-term charts for BSE, that's very strong and positive, no doubt about it. Intermediate term trend, we did witness some sharp correction towards 3,600 levels, and then currently it's up by almost, I would say, roughly around 50% since the low on 11th of March. So that's a phenomenal rally which has happened. So the recent top which it had made somewhere in February, that's on 21st of February, that was around 6,000, 6,100. That should act as an immediate zone of resistance. But yes, the bullish momentum is there. But that could be the level where it could meet with some resistance, and the stock could then go in for consolidation.
Okay, that's about BSE. But another stock that has been doing well is ONGC. Shares in fact gained the most in 12 weeks. Jefferies, of course, has a buy call. Target price is at 375, which is of course higher than its 52-week high of 345 as well. Good recovery if you see, the last 1 month as well, last week, in fact, last 5 days or so, it has gained somewhere around 10%. Is it looking good as a positional play, ONGC?
So if we look at ONGC, see what ONGC is particularly looking at on the charts is, yes, that it seems to have formed a bottom. So the recent lows of 220 or so, to be precise, the recent low was around 215. So that seems to be a very strong bottom, or you can say a short-term to medium-term bottom for the stock. But if you look at it on other time frames, the high that which the stock has made today is something which is going to be very important. I would say close around 245, 246 today. So sustaining above the 250, 260 mark is something which is very essential for the stock to witness any meaningful rally. Today's volumes have been extremely high, and the volumes over the last few trading sessions last week, they were also significantly higher. So that tells me that there is definitely some positive biasness in the stock. But for any major rally, wait out for 255, 260, sustaining over that level. Yes, then the stock has the potential to rally towards the 300, 320.
Okay, that's the view on ONGC. But let's move on to some other stocks. Then Force Motors, that's one stock on my radar. Of course, the stock has risen on the Defence Force order for 2,978 vehicles. But the stock has been moving up quite significantly in the last 1 month. With force, you can say it's up somewhere around 35% or so. But is this leg of the up move that we've seen on the stock nearing its end, or is there more steam left here?
Say this is one stock which is very strong on the intermediate term. There are very few stocks which are strong on the intermediate term trend, and this is definitely one of them. And on the long term charts also, on a longer term, when I'm referring to the quarterly charts, the momentum is very strong. So effectively it means is that the stock is definitely a buy on dips, no doubt about it. And as far as the levels are concerned, very strong support for the stock is somewhere around the 8,400, 8,500 level. But upside, the stock needs to sustain above the 9,400, 9,500 level. Because if you look at the stock, the all-time high was somewhere around 10,277. And prior to that, the September highs were somewhere around 9,760. So yes, the stock could witness some profit booking, but the momentum is very strong on the charts. So corrections are a buying opportunity. 94, 9,500 would be the first zone of resistance. If that is taken out, then the stock would make or witness record highs.
Okay, poised well, Force Motors on the charts. But two stocks I will draw your attention to. Of course, defense stocks have seen a very strong comeback. Look at the likes of HAL. The shares, in fact, clocked their best monthly returns in 5 years. One question is there a possibility of the stock hitting 6,000, HAL? And BEML has also seen a big spurt in the last 1 month. What are the charts of a BEML telling you?
So first talking about HAL, HAL had witnessed a very sharp correction. If you look at it from almost 5,600 levels to 3,000 levels. So the stock had corrected significantly, but then it has pulled back sharply. And as you rightly said, in a month, rising by almost 35% is phenomenal for the stock. And that also has been on decent volumes. So the stock could witness some sort of further rally. But if I look at the stock has got some resistance coming around the 4,400, 4,500 level. That's a zone of resistance for the stock. So those who are long, they can look at booking profits around those levels if they're looking at from a medium-term perspective. And fresh entry at the current levels, I wouldn't recommend. Talking about the other stock which you mentioned, BEML. Right. So BEML isn't really as, it has also generated almost 30-31%. But if you ask me a choice between HAL and BEML, it would be anyway HAL. Because BEML is likely to run into very strong wall of resistance anywhere between 3,400 and 3,500 zone. That could be it. And where we could witness some profit booking stock.
Right. Last couple of questions, really, Amar. I want to draw your attention to a Capri Global. There's been crazy moves on the stock. It was up over 16% on Wednesday, and then yesterday, from the day's high, it plummeted 24%. And today, again, I think it ended higher by about 2% or thereabouts. And these moves have been backed by heavy volumes as well. Anything that you're spotting on the charts? What are these moves telling you, really?
Honestly, I really don't track this counter. But as you said, why I'm saying that? Because if you look at the daily average volumes in March, there were days where it was doing volumes of only 2 crores and 3 crores, 5 crores. But as you rightly said, over the last 3 days, that is 26, 27, 28, volumes have been phenomenal. It's running into thousands of crores, and the volatility has been extremely high. I would say that you definitely need to be cautious in such stocks. Because yesterday's high was 231, low was around 162. That's phenomenal sort of volatility and not really desirable in companies. So that tells me that you need to be cautious, and until there's some very valid reason to get in the stock, please stay away.
Okay, that's the call on Capri Global. need to be cautious and if possible stay away. But before I let you go, Amar, any ideas that you would like to share for our viewers? Any recommendations for the next couple of weeks on the short side
Yeah,
or on
sure.
the long side?
Yeah, alongside one is from the pharma space. Ipca Laboratories is good technically on the charts. It's bounced back significantly from 1300 levels to 1500 levels, and on the long-term charts also the stock is gaining some sort of momentum. So this is one stock one can look at buying at the current levels for a target of 1665 on the upside and a stop loss below the 1400 level. And the second stock to look at is Voltas. This is again one stock which is currently consolidating, has witnessed some correction, but then again is trying to inch higher. So this could be the second stock buying at the current levels with a stop loss below 1400 and a target of 1565 in the short to medium term.
Okay, Ipca and Voltas, two ideas coming in from Amar. With that, Amar, would like to thank you for taking out time this afternoon and joining us and sharing your thoughts with us. Always a pleasure, and I hope to have more such conversations in the near future as well. And here's wishing you a very happy long weekend.
Thank you and wish you the same.
Thank you. Well, with that, we've come to the end of this edition of Closing Bell. Of course, we've wrapped up the week on a positive note, the month on a positive note, and even the financial year, a challenging one in the positive note, with gains of somewhere around almost 6% on the index. Of course, FY26, let's see what that has in store for us, given the fact that we have quite a few events to watch out for. The first one being the April 2 tariff deadline. Then we have earnings to watch out for. We also have the RBI's MPC meeting outcome on the 9th of April. So yes, April in itself is going to be a very, very crucial month for the market. But with that, completely timed out. Thanks a lot for tuning in to Closing Bell. Have a great long weekend and come back and join us on Tuesday morning with the markets. But till then, see you. Have a great time.